We're 3 hours into trading. It is Friday, June 11th. Thank God it's Friday. Hello, traders. Not a lot of market action, but a lot of action within. Let's take a look at yesterday's pick. Let's do a little market analysis. Let's find our pick for today. Yesterday, Microsoft was the pick that I showed you. I liked selling it out of the money bullish put spread, keying off of that 250 support right around that 50-day moving average, selling the 250 puts, buying the 247.50s, doing it for a 40 cent credit. You should have been able to get that trade off if you had the order working. You can see how the stock is higher today. Well, what's so impressive about that? The market is down. When the market is down and the stock is up, that is a sure sign of relative strength. Let's go into the 5-minute chart, and you can see the video came out right about it here, and you can see that the stock did finish higher on the day. We had a little bit of a dip in here. That's where you would have been able to get filled on that bullish put spread. Today, the stock opens much higher, and as the market is selling off, the stock is continuing to move higher. So the market down, 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 stock up, up, up. I think Microsoft is going to continue to move higher. Tech stocks in general have been pretty weak. However, they are getting a little bit of a breather because TLT bonds have been moving higher. There's the CPI number. Big sell-off in bonds as that hot inflation number came out, but look at the reversal. That was very, very important because it tells me that traders feel that the Fed may be right about transitory inflation. Go into the daily chart on bonds and you can see that this horizontal breakout is holding. So I think that the pressure on tech stocks is going to start waning, and you're going to see a pretty decent bid in them from this point forward. The market, on the other hand, not doing a whole lot. I'm going to finish off with Microsoft, though, because that was the stock of the day. And again, I'm not saying that you have to buy stocks and you have to buy call options. I don't think that's the best strategy right now. I think you want to be selling out of the money bullish put spreads to take advantage of time premium decay. Yes, you want to be in the strongest stocks. Yes, you want to have heavy volume. But this is simply a safety net so that if the market does pull back, you've got plenty of cushion before that trade gets into trouble. And you just want to sit quietly and patiently and wait for that time premium decay to work its magic. I like that 250 support on Microsoft. I think the stock will continue to grind higher, but this is a high probability trade that will yield about 22% in the course of 3 weeks. Very nice return. So let's take a look at the overall market, and I'm going to go into the daily chart first, and you can see lots of red candles. I always preach it's so important to put the current price movement into context. Well, what exactly does that mean? That means that you need to take a look at the longer term picture and get an idea of what the market is really doing and what it's telling you. Well, what do all these red candles mean to me? It tells me that the market has a tendency to open on the high and then to sell off. Open on the high, sell off. The closes are lower than the open, and that is why you see red candles. Well, what's so important about that? That tells you that every time that the market gaps up and you have this irresistible urge to rush in and buy stocks, you're not doing the right thing, because you're always going to have an opportunity to buy those stocks at a better price because the market has been coming in. So folks, do not chase stocks on the open, please. This market is compressing near the high. Right now we are in a news vacuum that favors the current momentum. So yes, every morning you turn on your screen, boom, S&P up 6 points. Boom, S&P up 10 points. S&P up 15 points. Oh boy, here we go. This is the one. Now we're going to break out. Go buy all your stocks on the open. Here we are. No. The daily chart is telling you be patient with your day trades. Do not rush in and buy these stocks. Of course, there are exceptions. I'll show you a couple of exceptions today, but they are all predicated on heavy volume. As far as the overall market, I don't see anything here that impresses me. I don't see anything that tells me that we're going to lift off. It's going to be very quiet, choppy trading. Every time you get these gap up opens to a new all-time high, they are faded. There you go. Large tails above body. Can't get through the prior day's high. And then the air gradually gets let out of the balloon and we sink lower. So the stocks that you thought you had to have right here on the opening bell, probably should have waited, could have gotten in much better. So what are we seeing on the 10P indicator? Well, right here, you can see we had a bearish cross right in here. It was telling you that there could be some trouble because the 10P indicator had spiked, and there you get another bearish cross right in there. So yeah, you want to be patient. Well, what's it telling us right now? Well, we had a bullish cross here, another bullish cross here and here. I don't pay too much attention to these multiple crosses down here. The underlying premise is that we are in a deep trough, and yes, we are starting to get some crosses. We're also starting to see some support. I like this bullish engulfing candle right here. Always look for key candles. They will tell you what the heck is going on in the market. These are key candles. These are bearish hammers, inverted hammers with a long wick above the body. That tells you that there's selling pressure up there. This is also a key candle because this is almost a bearish engulfing candle. So those are all very important to watch for, but this tells me that this support level is probably going to hold. We see multiple support. My guess for today is that we're not going to see a whole lot of action. We'll probably drift into the middle of the trading range. I don't think we've got the firepower to get through yesterday's high, so I'm just looking for a very quiet day. So, in that context, let's see if we can find a decent stock. Day trading is the way to be right now. Ride the moves, get out, take your profits. So I'm going to show you a couple of examples. I had been in Lilly, and yesterday I took profits on that big run up. I'm like, well, what more can I ask for? The stock was up actually $9 yesterday. So get out, take your profits. Look at it today. If I didn't take profits yesterday, I would have been kicking myself today. Here's another hot one that we saw. And I could go right down the list. CLOV, oh my gosh, look at that rocket right there. And then the next day, oh my God, look at that, it's going to the moon. What did they find a cure for cancer? I don't know, but everybody wants some. If you are not taking profits on these stocks, you're going to be sorry. These are all head fakes as far as I'm concerned. One day the stock looks red hot and it's going to the moon, and the next day it looks awful. That's the sector rotation that I'm talking about. And that's why you have to take profits and focus on day trading and not swing trading. Because if you hold these overnight, they end up reversing and you have no gains. So I'm trying to find stocks that actually have some staying power, look good. Volume is the key. I'll show you a stock that we were trading this morning that looked really good, VRXT, and we made a ton of money on this. And this is one of those examples where you have the stock moving higher on massive, massive volume. And that is the key that you want to be looking for in all of your stocks. Massive volume tells you that the stock has a chance to continue going higher. So Sava is another one that's had that same type of volume. And look at that breakout. Look at the volume all day long. Big volume. Not just a one-off spike like this, a little cluster of volume. It just got filled on an order. That's nice. But in any event, you want to be looking for sustained big volume. Super, super important. So VXRT, let's take a look at that one. This was also nice. So stock, some really big candles in here, able to hold all of the gains right in here. So yeah, we had a couple of red candles in here. Here's how I looked at that. We had all of this long green candle preserved that halfway point. Very, very important. All of a sudden, a series of higher lows. And now we're starting to break out through resistance. Boom. There you go. That was a big gain from about $9 to almost $10 before it ran its course. But if you didn't take profits and you were being greedy, you gave it all back. So you have to set targets, have to take profits along the way. But this type of volume tells me that this stock is going to make some pretty legitimate moves throughout the course of the day. So please make sure that you're setting your targets. The market's going absolutely nowhere. You have no tailwind. So I'm going to go to my favorite search, which is Pop Bull. This is what I use for swing trading, and I'm going to go right to NIO because that is your stock of the day. Talk about volume. There you go. Massive, huge volume all day long. Not just a little volume and then nothing. All day long. This stock wants to go. Go into the daily chart. You can see how it's been able to break through horizontal resistance. Let's put up the major moving averages so we can see where they come into play. Put up that 200-day moving average, put up that 100-day moving average, and you can see, boom, right through the 100-day moving average. When stocks on huge volume are able to move through these major moving averages or major horizontal resistance, they tend to have sustained moves. So you don't want to see it rally up to that moving average and just sit there. You want to see it blow through. So on NIO, that number is roughly $44. Let's take a look at that 5-minute chart and see what the stock did at $44. So it ran up to $44 right in here. Did it pause? No. What did it do? It just blew right through it. Ah, excellent. That tells me that this stock is going to go. Now, if it ran up to that number, the 100-day moving average, and it sat there and then it kind of pulled back, that's okay. That's actually very normal for a stock to do that. And then you want to watch the subsequent moves. If you see a big volume spike and it gets through on the next attempt, then it's probably going to go. If it just kind of waffles around all day and just can't quite get through it, that tells me that there's selling pressure and the stock's probably going to try and eventually roll over. But when it can get through those big levels on the first attempt on big volume, you know it's going to want to go. So currently we see the market pulling back a little bit. There are a couple of setups that I would look for, basically because everything is so quiet today. I'm not looking for this particular pattern that I'm going to show you, but we are getting some bids layered in here, which tells me that this is an area where we could trigger some sell stops. Bye, 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 bye. So this is where the programs will try to go in and hunt for these sell stops. I'm going to click my horizontal alert line right here. That alert line has been drawn. If we break through that alert line, we're probably going to see some long red candles as those sell stops are triggered. But then I think 2 or 3 bars after that, you'll want to look for a bullish engulfing candle and maybe a bullish hammer off of that low. That would tell you that we're going to go back into the range and have a nice compressed little doji candle for the day. And that's how we'll conclude the week. That's if we take out this low, you'll see that type of price action. That could be a nice little buying opportunity in here if you see that bullish engulf or bullish hammer. Then you want to make sure that you've got your stocks ready to have relative strength and that have been treading water or moving higher during that down move. Then you'll have a nice little market tailwind as the market rallies up and gets back into the middle of its range for today. I'll be watching for that. We'll see if it happens. Otherwise, come down here, test it, get a little bounce, drift a little bit higher. Absolutely nothing going on in terms of trading volume. Go back to that daily chart. I don't have volume up on this chart, so let me use this chart where I do have volume running, and I want to show you on a daily chart. This is what we're talking about. Look at how dismal the volume has been on the S&P 500. There's nothing going on. We're not going anywhere. So make sure that you find stocks that have fantastic relative strength and massive volume. Let's see if anything else looks interesting. I already showed you SAVA. We saw that one early in the day. XPEV, you saw me get filled on one of my orders on the way out. I'm scaling out of that position. That's a nice looking stock right now. You can see how that stock has just been stepping higher. Look at the volume. Massive volume. It's continuing to move higher. AFRM, big volume. Pop Bull. One search. 5 stocks. Very easy. Let's go into some of the day trading searches. Let's see if we got anything cooking on short squeeze. Of course we do. FSLR, too choppy, choppy back and forth. In a choppy market that's going nowhere, you don't want a choppy stock like this. You want something that has super nice, tight price patterns. This is getting choppy now. That was your opportunity. That move has run its course. Going to red hot, TIGR. Let's take a look at that one. Not too bad. Bullish flag here. You got nice long green candles closing on their high, stacked, big volume. Got a bullish flag right here. There's your downward sloping trend line, and then boom, right up and through. What would have been a clue that this stock might actually have a bullish flag pattern and that the stock is not going to continue to come in? What might that clue have been? Well, first of all, you've got this doji, which is actually more of a bullish hammer in here. Nice reversal there. Then you got this long green candle here. Oh, that's interesting. Ah, volume. That candle comes right in here, and now the volume starts to escalate after that. But we also have something else that we can take a look at, and that is the 10SI indicator that measures relative strength. And there you go. You can see stock pulls back, relative strength still hanging in there. And then as soon as you see this start lifting off, this orange line above zero, you know that you've got a decent trade. So I like the fact that TIGR has been able to get through the prior day's high. Take a look at this chart right here. Not real keen of that candle right there, which is a bearish engulf, but we're erasing it today, and the stock is continuing to move higher. Let's see, what else do I like today? McDonald's was coming up on my radar today. I like McDonald's through this downward sloping trend line, nice gap up, able to hold that resistance level so far today. Not great relative strength on a daily basis. So I'm going to see if I can find maybe one more stock in here that looks good. And I'm just going to click through until I find something that strikes my fancy. Dash could be good through the 100-day moving average. That could be a nice one on a GTC basis. I'm just going to click on the open on that bar right there. See if I can find one more in here for swing trading. This is nice. ZS, actually very nice. You've got this horizontal breakout right there. You can see how the 100-day moving average held. All of the gains from yesterday held, and today the stock is continuing to build on those gains from yesterday. ZS looks good, but no volume. So we don't need to mess with it. Your stock of the day is NIO. Keep your swing trades very, very light. If you've got nice profits in your day trades, take them. Don't try and milk everything you can out of them. Trade smaller size, reduce your trade count. This is a low probability trading environment. And the problem that I see with novice traders and even experienced traders is that they want to have the pedal to the metal all the time. Well, think of a race car driver. Does he keep the pedal to the metal the whole race? No. He slows down around the corners. He has to. He sees what's coming ahead. He takes a look at the track, takes a look at the conditions, and he eases up. That's what a trader has to do as well. You have to know when it's time to swing for the fence and when it's time to just hit singles. This is a time to hit singles. Thanks so much. Have a great weekend, everybody. I think I'm going to do a video Sunday night, so watch for it. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.